If you want to turn your investment capital into a meaningful monthly paycheck sooner rather than later, a standard 3% dividend yield just isn't going to cut it. So today, we are cranking the volume all the way up. Welcome back everyone, I'm the Swedish dividend investor. So today, we are building another income portfolio, and this one will focus on an even higher yield than the last one. I like to play around with numbers and holdings just to see what is possible. It will be a 6 covered call ETF portfolio, but with a twist. So let's go through what the portfolio is all about. We will do a brief overview of each of the holdings. We will use different amounts of capital. We will use different tax scenarios, including taxation on Swedish ISK accounts. This time, we won't do an equal weight approach. We will take a look at the different levels of income based on invested capital and tax rates. So, what's the goal of this portfolio? The goal is to have a stable base consisting of real strong covered call ETFs and produce a meaningful monthly income without going balls deep into risk. Some of you may say,
"Hey, covered call ETFs are risky."
And to that I say, yes, in the sense that they are assets trading on stock exchanges. However, most of the CC ETFs are only 70 to 85% invested into the underlying assets, meaning if we get a steep decline, the CC ETFs should fall less since they follow the underlying assets. So, in a sense, covered call ETFs have lower volatility, and the downside gets cushioned somewhat from the premium income. If you're skeptical about covered call ETFs, that's good, and if you want to learn about how they work, I've linked a video where I go into detail on how it works. Before we move on, this is not financial advice. I'm just sharing my investing journey, my experiences, my crazy experiments, and my own analysis. Read the full disclaimer in the description. With that out of the way, let's go through the holdings. All the holdings have monthly distributions, and in the case they pay in dollars, it is converted to euros. First out is JP Morgan Europe Equity Premium Income ETF, ticker JEPE or JEEP. This ETF is very young, but very promising. They focus on European equities, so a great ETF to not be overweight into the US. Their first 3 distributions are super high. If we add them up and multiply by 4, we get an annual distribution of 3.23 euros, and with a price of say 25.5 euros, that's a yield of 12.66%. Their aim is 8 to 10%, so I've gone for a bit more conservative distribution of 2.8 euros. So for this example, their yield is about 11%. This one will have 22.5% allocation. Next up is JP Morgan Global Equity Premium Income ETF, ticker JGPI or JEPG, another JPM ETF, and as the name suggests, this one holds global companies and offers low volatility compared to its cousin, WINC. It is a bit skewed towards the US, roughly 65%, but honestly, that's pretty much the case for every global ETF. Their current yield is roughly 8.1%, another base, so 22.5% allocation. Now we get into a bit more juicy holdings. JP Morgan Nasdaq Equity Premium Income ETF, ticker JEQP or JEPQ. This one has a heavy focus on tech, and it is about 100% US focused, so you better buckle up. They provide a high income, usually around 10 to 11%, but in this example, their yield is just under 10%. We are going with 22.5% allocation. Next one is Invesco Nasdaq 100 Income Advantage ETF, ticker QQIA. You might think I'm crazy. Why would I go for 2 Nasdaq ETFs? Well, different managers and different strategies. QQIA sells both call options and put options. As far as price performance, QQIA has performed very well while still generating a double-digit yield, something very unusual when it comes to covered call ETFs. I've linked a video where I do a deep dive into QQIA. Watch it after this video. Their yield has gone down since the price of the ETF has climbed, but still yielding a tad bit over 9%. Let's go with 22.5% in this as well. Here comes the twist. I would like to make a cautious note here. These are very special instruments. I don't recommend them, but they could have a place in a portfolio where you are using the income. This is just an example. Proceed with caution. YieldMax, Future of Defense Option Income ETF, ticker NA7Y or NATY. Yeah, YieldMax hasn't got the best reputation, but this one isn't too shabby so far. In the yield category, it is bonkers. The distribution is somewhat steady, and they have a yield of around 23%. Something this crazy, if it would ever go into a portfolio, should be kept at a very low allocation, since we are using just 6 holdings and we aim for an extraordinary yield. 5% will go into this one. Alright, last holding, YieldMax Semiconductor Option Income ETF, ticker YCHP or CHPY. Another YieldMax ETF. And just look at the performance on this one. They have managed to capture upside with this one, at the same time having a 30% yield. That is crazy. Now, the distributions swings with the price. If they go down, the distributions go down, and vice versa. This will get the last 5% of the portfolio. If you enjoy my work, commenting, giving a like and subscribing is an easy and free way to support the channel. Thanks! So, now we have the portfolio ready. Time to add some capital. Like my last video, I will do 8 examples in total. 4 examples with 0 dividend tax, but taxation on the capital, like I and other Swedish investors have. And we will do 4 examples with a tax rate of 24%. That's the average dividend tax in Europe. So let's go. The first example is a beginner investor. He has saved 12,000 euros. Is this a beginner portfolio? No. So we just enter 12,000 and we head on over to the charts tab. This spreadsheet is a work in progress, so I will still need to do some work on some of the features here. We only need to look at the charts once, since it's the same for every example. We can see a 50-50 split in the sector/focus. Do JGPI, JEPE and NA7Y hold some tech? Sure, but it's not their focus. Risk type. I deem JEEP and JGPI as moderate risk, and all the high-flying tech as high risk, maybe even very high risk. So 45% moderate and 55% high risk. Holding type. 90% core holdings. Even though the Nasdaq ETFs are risky, they aren't bad covered call ETFs. They perform very well and are stable, as long as tech don't crash. Yield users. 10%. Pretty self-explanatory. They are used not only to boost the yield, but to really juice it up, using a low percentage allocation. We also see the monthly income is the same every month. In reality, this will be higher some months and lower some, but they all pay monthly, and we are using averages. Time for the ISK taxation. A subscriber, Andrea Turno, pointed out the fact that I actually pay taxes on investments even if I don't pay tax on dividends. This will be put on my tax bill every year. As long as I'm working, this isn't much of an issue, but I think we should take it into consideration. Really quick how it works. The tax rate is 1% per year on your total portfolio value. The current government did make the first 300,000 Swedish crowns completely tax-free, so the tax is somewhat variable, since we have to deduct 300k and tax the rest with 1%. I've simply added a rule here. If the value is less than 27,500 euros, I converted it. The tax is 0, and everything above gets taxed with 1%, as you can see. So we have an annual income of 1,362 euros, monthly of 130, and a yield on cost of 11.35%. So for the next example, this investor has some years behind him, and he has saved up 50,000 euros. So we head on over to the ISK taxation. Now we can see I have to pay 225 euros in taxes each year. Pre-tax annual income of 5,676, monthly of 473, and a yield on cost of 11.35%. This stays the same in every case. After-tax annual income of 5,451, monthly of 454, and an after-tax yield on cost of 10.9%. Let's do my portfolio value as invested capital, around 140k euros. Now we can see the taxes jumped quite a bit, 1,125 euros. That's about a 7% tax on the dividends if we were to pay it using dividends. Pre-tax annual income of 15,893, monthly 1,324, after-tax annual income of 14,768, monthly 1,230, and a yield on cost of 10.55%. For the last example, using ISK taxation, let's go for someone who has 400,000 euros in capital. The annual tax is now 3,725 euros. That's about an 8.2% tax. Still meaningful income on a portfolio of 400k. You can see all the pre-tax numbers. After-tax annual income of 41,683, monthly 3,473, and a yield on cost of 10.42%. Pretty sweet. Now, let's do the same examples, but with a 24% tax rate. I will do this on this page, since we don't have to do the complicated calculations of the ISK tax. 12,000 euros. We see an after-tax annual income of 1,035 euros, or 86 euros per month, and an after-tax yield on cost of 8.63%. This will stay the same for every scenario, since it's not variable. 50,000 euros invested. After-tax annual income of 4,313, and a monthly income of 359. 140,000 euros invested. After-tax annual income of 12,078, and a monthly income of 1,006. And the last example, 400,000 euros invested. After-tax annual income of 34,510 euros, and a monthly income of 2,875 euros. So what can we take away from this thought experiment? I would say this is a very risky portfolio. Not only the yield max ETFs, but a high exposure to tech stocks. Sure, they do great now, and these ETFs are printing money. I own both JEQP and QQIA, but I wouldn't put 45% of my money in these two ETFs. On the other hand, we still have 45% invested into JGPI and JEPE, which are a bit more conservative as far as holdings go. I can't say I would sleep well having this portfolio, but if I really wanted to juice up my yield, this could be a way to do it. To be honest, I would rather just go with a bit lower yield, more sleep well at night, and have a lot more holdings to diversify the risks. It's fun to play around with this, but always remember to do your own analysis. Take your taxes into consideration. This is just me coming up with crazy ideas. I want to know what you think about this thought experiment. Was it way too crazy? Make sure to let me know and tell me what you would change about this portfolio. But that's it for today, guys. I will see you in the next one. Until then, stay smart, stay patient, and keep stacking those dividends. Ha det gött!